Hi everyone, welcome to Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi, and remember, this is the show where we get you top technical as well as fundamental picks and of course address each of your individual queries as well as portfolios. So here's all that we have lined up for you on the show today. Some individual stocks that we'll be discussing, Ashok Leyland, Finolex Cables as well as Gati. And today, later on the show, we'll be bringing on board the portfolios of Chidanand SA as well as Ranjith. So let's get on with it and bring on board our experts then. On the fundamentals, we are joined by Mr. G. Chokalingam from Economics Research and Advisory, and on the technicals, Mandar Jamsandekar from Precision Technical Analysis. Welcome to the show, gentlemen. Thanks so much for joining us on Buy Now, Sell Now weekend. Let's bring on board our very first query then, and it's coming in from Kiran Pinchala, who says she has bought 15 shares of Finolex Cables at 533 rupees per share and wants to know if these should be held or sold. Well, let's understand the fundamentals first, and Finolex Cables, well, while it has seen quite a run-up come by in the last couple of months or rather years, the question is, do you think that the run-up can continue? And let's get in a fundamental perspective. Mr. Chokalingam, very minor loss is what she's sitting at. In fact, it's more or less at the money for her at this point of time. What would you advise the viewer to do?
She can hold it. She, joined the rally very late. In the last 2 years, the stock has become already multi-bagger. On FY19 earning, it's fairly trading at around 20 PE, which is a very fair one. And secondly, it uses a derivative oil as a core input. And recently, the oil prices have bounced back above $50, now trading at around $52 per barrel. So that would be negative. So therefore, she can hold it. Target price is around 520, but she can hold it till she gets her principal, and then she can offload the stock.
Okay, so hold on for now. Well, yes, perhaps she's joined the rally a bit too late, but nevertheless, a whole recommendation coming in from Mr. Chokalingam. Let's understand a technical perspective then. A small quantum of shares purchased. Mandar, what would you advise her to do?
Mubina, see, if you look at the long-term chart, then the stock is trading in a nice uptrend. So therefore, the long-term, with the long-term uptrend continuing, I think she should continue to hold. But then this chart, the long-term chart also tells me that the stock is a bit stretched. So if you look at the move that the stock has witnessed in the last 1.5 years, the stock has more than doubled. So therefore, I think it's a bit stretched on the long-term charts. But then when I move on to the short-term charts, then the short-term charts tell me that the stock also has got a support at around those 450 levels. And this level has, the stock has been respecting this for the last few months. So therefore, with the stock trading on 450, I think she can continue to hold, keep a stop loss at 440 because the long-term charts are straight. Therefore, the stock should go through a consolidation before the next leg of the up move. So therefore, I expect the stock to consolidate between levels of 450 and 550 for the next 3 to 4 months. So just because the stock is trading on supports, continue to hold, keep a stop loss at 440, and she should be able to get a price target of around 540 to 550 in the next 3 to 4 months.
Okay, that's, I think, a consensus whole call coming in on Finolex Cables at this point of time. Additionally, Kiran has sent in one more query. Bought 80 shares of Ashok Leyland at a price point of 100 rupees per share. Is it a wise option to hold it, or perhaps book profits and move out of Ashok Leyland? Well, once again, I think the discomforting point would be the purchase price because she's purchased it at 100 rupees. Nevertheless, she's still sitting on good profits at 107 rupees is where the current market price is at. On the fundamentals, Mr. Chokalingam, we just had the numbers that had recently come out for Ashok Leyland. I think the numbers were more or less in line with expectations. How would you look at the fundamentals for the company?
Yeah, in my estimate, the fair value is around 110. So she should sell if it moves beyond 110 and shift to M&M, Mahindra and Mahindra. In relative valuation term, I think Mahindra far superior to Ashok Leyland at a price of above 110. I am impressed by M&M because they are going very aggressive on global front in promoting farm equipment business after making a big success within the country. So I am pretty confident they would succeed, and therefore I would suggest this shift if Ashok Leyland crosses 110 rupees.
Okay, so the key target out here is 110 rupees. Fair value for the stock is 110. So once the stock hits that level, perhaps you may consider booking out your profits at that level and looking at an M&M. That's Mr. Chokalingam's advice. On the technicals then, Mandar, what would you advise her to do?
Mubina, see, this I think the pattern formation that I see on the long-term charts is positive. The stock has been witnessing good kind of positive undercurrent. So from levels of around those levels of 80 and 90, the stock has seen good kind of accumulation, and that's the reason as to why the stock has seen this up move to the levels of 109, 110. Now, so long-term charts look good. If the view is long-term, then I think she should continue to hold. Now, the only concern is that the stock has got a resistance between 110 and 112. So there's a small resistance there. If the stock manages to break that resistance, then yes, the stock should see a very fast up move. So the upside from there on could be 20 to 30%. So therefore, I think with the strength that the stock has been showing lately, she can continue to hold, keep a stop loss at around those 98 levels because 90, around 100, the stock has got a good support. So keep a stop loss at 98 and continue to hold. If the stock manages to move above 110, 112, then I think she can also think of adding the quantity that she has. The next target in that case could be 140, 145.
Okay, so those are the levels that you must monitor when it comes to your investment in Ashok Leyland. Let's move on and bring on board our next query. It's S. Kannabiran from Bengaluru, who says he's bought 60 shares of Gati, purchased at 182 rupees per share. With a time horizon of 3 years, should he hold or sell? That's the question. Well, the last couple of months, we've seen Gati mostly react to GST developments. However, now that that's behind us, you can see that the stock has been, well, fairly stagnant. And in fact, Kannabiran is sitting on a loss figure of 3,700 rupees. Mr. Chokalingam, advice on the fundamentals, what would you advise him to do?
He can hold it. I doubt whether he can get back 182 rupees within a year or so. Maybe if he waits 2-3 years, he might get, because at current price for the current year, it's already trading at around 32 PE. And you know, at best, I think in the short term, he can get about 135 rupees because of GST. That would help you know, road logistic companies to save on cost. But otherwise, the stock is already highly stretched. You know, even before GST could come in, 2 years back itself, the stock went up about 300. So this is a lesson he should learn, and you know, he should always try to enter the mid-cap stocks when the valuations are very attractive.
Well, perhaps the entry point was a bit discomforting, and that's the reason why you are seeing that huge loss come by in Gati. Let's understand a technical perspective as well. And Mandar, what would you advise him to do?
See, Mubina, for the last 2.5 years, the stock has been trading in a downtrend. So if I look at this particular time frame chart, then yes, this stock does not look good. It does not appeal to me from an investment point of view. Now, the only positive thing that I can see on this chart as of now at the current levels that it trades is that it's trading on a good support level. So this support comes in at around those 110 to 100 levels. Between 100 and 110, this stock has got a very good support band. And this level has been, the price has been respecting this level for the last 1.5 years. So therefore, just because it's trading on supports, I think he can continue to hold. I don't see major upsides as of now, but as and when the stock will start moving above 145, then yes, that could become, that would be the first sign of a change of trend happening. But as of now, because the stock is trading on supports, I think hold, keep a stop loss at 90 rupees and wait for the stock to react. If it starts moving above 145, then yes, we should take a review.
All right, so that's the view coming in on Gati. I think both of our investors have given a whole recommendation, at least at this point of time. Thanks a lot for sending in your individual queries. We'll slip into a short break. When we come back, we'll be getting some individual portfolios addressed. Don't go anywhere. Welcome back. This is Buy Now, Sell Now Weekend, and of course, we are going to introduce all of your individual portfolios and get those answered by our fundamental experts. So let's bring on board our very first portfolio. It's Chidanand SA who sent in his portfolio. He's 28 years of age. He is a computer billing professional and he has a short-term time horizon. The stocks in his portfolio meantime are Moil, he's bought 150 shares of that one at 338 rupees. Barmer Lorry, 85 shares of that at 240 rupees. And lastly, JB Chemicals, 95 shares purchased at 335 rupees. Now currently, based on the market price that the stocks are trading at, as you can see on your screens, he's clearly just at the money for most of the stocks, are making some marginal losses. So Mr. Chokalingam, what would you advise him to do?
Yeah, actually these three are my passionate value stocks. In fact, we personally invested in Moil and JB Chemical. First, JB Chemical, the stock is slightly down in the last 2 months because of developments in the pharmaceutical sector in the stock market. But however, I am pretty confident on JB Chemical that it would go back above 400. So therefore, the regulatory risk is limited for this company. And secondly, significant amount of cash the company holds. It's a net cash company, and thirdly, it's quite doing well in the domestic market. The other reason for the stock to correct is that in the last 2 quarters, I believe the management has spent a lot of money for expansion. In fact, in the last March quarterly results, in the footnote, the management itself mentioned that some of the expenditures are in long-term nature. So that is the reason the profit was really subdued. But I am pretty confident that it would bounce back. On Moil, I believe it's a great long-term stock. 81 million tons of reserves of manganese ore. Twice in the recent time, increased the prices of manganese ore. Now sitting on cash, which is close to 50% of the market cap, and trading at around 9p on current year earning. And in fact, the equity paid up capital has come down post buyback by the government. And I believe the outlook for metal space looks quite robust for next 1 year. And therefore, I believe this stock can easily go to 450 rupees. The only thing is he should be a long-term investor in all these 3 stocks instead of expecting something to happen in the short term. The third stock is Balmalari Company. It's again a very attractive stock, zero debt, sitting on net cash of more than 500 crore. And it's the major revenues from the logistics services and infra. And GST also would be positive for the company because some of the logistic players are customers of Balmalari Company. It has got a rich real estate assets. Its holding company Balmalari Investment has given declaration that it would divest the stake in Balmalari Company and wind up the holding company. This undertaking was given long ago, but now time is ripe with the kind of the new government thinking on stake sale. I believe this should happen very soon, and therefore this stock also has a long-term potential of giving even 100% return in a time horizon of 3 to 4 years. But in the short term, certainly it can give 20-25% return. So therefore, I suggest him to hold all these 3 stocks.
Okay, so while of course your time horizon is short term, Mr. Chokalingam is advising that given your portfolio constituents, it would be a good idea to be a bit patient and hold on for better returns. Let's move on and bring on board our next query. It's coming in from Ranjith. He's an engineer based in Kerala. He is a long-term investor and he's 44 years of age. The stocks in his portfolio meantime, BPCL 195 shares purchased at 393 rupees, Canfin Homes purchased at 2,123 and Delta Corp at 95 rupees, and as you can see, he's making some very good money on all of these 3 stocks. Avenue Supermarts again 330 shares purchased at 818 rupees. HDFC Bank, well, very early purchaser or rather investor in this stock, and he's really reaping the benefits of that one. And IGL at 859 rupees. LIC Housing Finance 160 shares purchased at 459 rupees. There's Maruti Suzuki at 4,293 rupees is where he's purchased that at, and PNB Housing at 1,360. So I think all in all, you can say one thing for sure about this investor is that he's purchased these stocks some time ago. He's held them on and now he's clearly reaping the benefits for all of them because he seems to be well in the money for each and every one of his investment. Mr. Chokalingam, I guess this should be sort of a model portfolio really, but the question of course is that perhaps some of these stocks may have run their due course. So let's get on the first 3 stocks, BPCL, Canfin Homes and Delta Corp. Good money being made. Time to book out?
BPCL you can hold. In the short term, the upside is limited, but in the long term, it can do well. The fact is that automobile population is continuously growing. So therefore, the fuel uptake at the retail station would continuously see a very good growth over the years. So therefore, you can even hold it for very long term. Canfin Homes, it's a great company, but let us not forget the fact that from 2013 level when it was trading at around 110, the stock has moved up almost 30-fold. Now if you look at the price to book value also, it is over 7 times. So it is one of the costliest housing finance stock, and affordable housing segment is now getting crowded. So therefore, I would suggest sell and buy Karnataka Bank, which is trading at 1.2 times price to book. And third, I would suggest sell Delta Corp, because its performance has been quite inconsistent, very difficult to rely in terms of consistent profit growth. I would sell this and buy what I consider as a very safe stock, L&T Infotech. As I mentioned earlier, I do expect a lot of consolidation in the mid-sized IT. In fact, L&T itself is divesting a lot of unrelated businesses, and the stock is available at around 11, 12 PE on current year earning, and zero debt and cash rich company. So therefore, I would suggest shifting from Delta Corp to L&T Infotech.
Okay, so while you can hold on to BPCL, it may be prudent to move out of Canfin Homes and Delta Corp and look in to buy in at Karnataka Bank as well as L&T Infotech. And the next three stocks, D-Mart purchased at 818 and a nice meaty chunk purchased of it of about 330 shares. So he's clearly sitting on some good profits over there. HDFC Bank once again just purchased at 1068. The stock doing wonders for him in terms of returns. And IGL, same story, purchased at 897. Mr. Chokalingam, your call.
D-Mart, I am not comfortable. I mean, the kind of valuation, it's about 1 year forward also around 62. So it's very difficult to digest this kind of valuation. So definitely I would sell, and I would recommend buying MRF. In fact, on Friday MRF tanked because of the poor results. It's only temporary, because early 2017 the rubber price went up, but subsequently the last 10 days itself rubber prices have come down by about 8,000 rupees per ton, which is very positive. And also July month we have seen robust automobile sales. Most segments, the top players have posted a double-digit growth. So that means offtake of tire by OEM also would be good. So therefore, I would suggest shifting from Avenue Supermarkets to MRF. Second stock is HDFC Bank. I would suggest hold HDFC Bank. I am pretty confident that the next 3 to 4 years at least, the bank would maintain minimum 15% profit growth year on year. And we have done a sensitivity analysis. If it can maintain 15% profit growth for the next 3 years, it can definitely give anywhere around 2400 target price. It's based on assumption that it continues to enjoy the kind of price to book value multiple it enjoys now. So therefore, I would suggest to hold on HDFC Bank for long term. And as far as IGL is concerned, again it's a great company, but the valuation is stretched. On 1 year forward earning, it's quoting around 22 PE. I would suggest a shift from OGL to ONGC. Surprisingly, ONGC at a consolidated level now trading less than its book value. I believe the possible merger of or acquisition of HVS also would be positive, because that would give at a consolidated level lot of stability for revenue and profits for ONGC. So, and also considering the valuation, I strongly recommend buying ONGC.
Well, yes, there's certainly a question as to the valuations for D-Mart and even IGL for that matter, and hence Mr. Chokalingam is advising that you perhaps would be better off moving out of these stocks, booking your profits. And the last three stocks, LIC Housing Finance at 459 rupees, Maruti Suzuki close to doubling his profits. The stock is of course at 7,770 versus his purchase price of 4,293, and PNB Housing at 1,360. Mr. Chokalingam, what would you do with these stocks?
Definitely LIC among three, it looks very attractive, because price to book value is only around 3.1 times. So therefore, he should hold. In fact, he should hold other two stocks as well, Maruti and PNB. But short-term upside is limited. So he should convert them as a long-term investments, because both of them have done phenomenally well. And in fact, PNB Housing is trading around 4.5 times price to book. So in case PNB Housing runs up another 10-15%, he should exit. Otherwise, temporarily he should hold both PNB Housing and Maruti also. Even after the stock has doubled in the last 18 months, it's still on 1 year forward earning, it is trading with quite attractive level. So I would suggest him to consider as a long-term investment and hold for long term.
All right, so there you have it, all the chops and changes that are recommended by Mr. Chokalingam on your portfolio. But please do remember, this is only a model portfolio. Do consult your individual investment advisor before taking any investment decisions. We'll slip into a short break. When we come back, we'll be getting you lots more technical as well as wealth creation ideas.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.